Well, joining me now is Brendan Capstick from Nedbank Private Wealth to give us his take on the market's activity. Thank you so much for your time, Brendan. Let's actually start off there with the macroeconomic news, and that is the GDP print that came out for the second quarter about 40 minutes ago. Looking a little bit better after that sluggish start to the year of 0.1%. What do you make of what has come out? Expected or not?
Good afternoon. Thanks for having me. I think as expected, we've seen some interest rate cuts this year. And of course, the discussions regarding inflation targeting. So I think we are coming from a lower base, of course, on the previous quarter, but I think these interest rate cuts are helping. A lot of these tariff noises also, in the rear mirror from that perspective. So I think markets are looking through this, but I think it's also, we're seeing these interest rate cuts coming through. Maybe just touching on our local market. I mean, our local markets had an unbelievable run.
Yeah.
Up nearly 23% on a year-to-date basis, and these gold and platinum shares just charging higher. So that definitely helps. Mining and mining production, gold production, definitely helping those figures as well.
Yeah, and of course we are seeing that impact on the rand as well, and it is just getting stronger and stronger. Really, really pleasing to see. And as we're talking about mining, of course, one of the big news for the day, and I guess maybe even the decade, is the agreement by Anglo American to merge with Teck Resources. Of course, we know Teck Resources in Canada from Glencore after they rejected Glencore's takeover bid, and of course Anglo American after rejecting BHP, now deciding that they are coming together. They're calling it a merger of equals. What does this mean for the mining landscape, and I guess also for Anglo American investors, considering the reaction that we got today?
Yeah, 100% right. I mean, very good news for Anglo shareholders as we see the share up nearly 10% so far. We see Teck Resources in the pre-market also up really 9%. So shareholders are happy with the proposed deal, the merger deal, all share deal. You mentioned the holdings shareholders, Anglo shareholders will own around 62% and Teck the remaining share. Market's really positive on this because it's trying to create a 70% copper play on that company, mostly copper from its earnings perspective. So looking towards a pure copper play, which I think the future metal that everybody wants to be exposed to. On that front as well, Anglo announced that they will be paying a special dividend around $4.5 billion, which is notable. So on that front, I think Anglo management has been busy. We've seen them selling down, of course, the remaining 19.9% Volterra. On that front, post the lockup period, also sold their nickel business. So yeah, really management coming to the party. We've seen a couple of bids, of course, from BHP last year. But I think all in all, I think from our perspective, really positive merger for Anglo American shareholders.
This is very interesting because I was particularly looking at Glencore's share price. It was also one of the leading gains in the mining sector. I didn't quite look at BHP, but I mean, I would consider that maybe this would be more competition for these counters, in particular when you look at copper. But it seems that the mining the investors aren't seeing it that way. How are you reading this, that we did get the other miners also surging today?
Maybe just put spotlight on management teams, trying to work assets more aggressively, trying to right-size portfolios. I mean, Anglo has been a leader in that space in the last 6 to 12 months. But also, I think it is a broader market phenomenon. If you look at the weaker dollar really coming into play on commodities and commodity prices. Iron ore has not really moved yet. But I think that's probably the next one to look towards and streamlining some of those businesses. Glencore does have, of course, copper exposure on that front as well. So there could be some uptick on a look-through basis for them. But I think all in all, I think the market is really excited by commodities and it's good for South African markets in the rand, of course.
Amazing. Well, let's get into retail and particularly food retail, because there was another announcement of corporate action. Of course, Spar had alerted us that they had put their Switzerland business as held for sale, and that sale is finally going through. So just talk to us about what this means for Spar's growth and strategy, particularly from where they come from, where they also let go of Poland.
Yeah, 100%. Management really, again, it's another story of management really coming and executing on their strategy as highlighted. Of course, now selling down the Switzerland stake, consideration just north of R1 billion to pay down debt and to create space on the balance sheet for other growth areas on that front. I think Spar is one that we picked before, and probably leading into my stock pick.
Okay.
So we do like it. I think the new management really doing a good job at this point. I think that whole sector is trading at depressed multiples as a whole. So I think we do like the sector, and it just mentioned the GDP figures as well, improving environment and a rate cutting environment for the next year or two.
All right. Well, before we get to your stock pick, Brendan, let's take a moment to touch on what counters your industry peers are watching closely.
Yeah, so production is going to go up about 40% year on year, combined with the unhedged positions Cobus just referred to. So for those investors, I don't know where gold's going to go to, but if you're bullish gold, and if you think gold's going to continue to keep at these levels, go higher, then PAN has got very good gearing towards that. With the 40% high production, as well as the hedge falling away, and very importantly also guiding that they are going into a net cash position. So they've pretty much paid off all the debt of all the capex projects they've had over the last few years. So they're in a very, very good position. And combined with the listing main board in the UK, you could see more institutional interest as well. I've also noticed locally some big fund managers have also been buying it, notably Alan Gray and so forth. So there seems to be more interest building up, and who knows where gold's go, but if gold continues to go up, I think PAN will follow suit.
I'm going for Kiro, which famously now is subject to corporate action, and the reason I like it is because to me it is a cheap entry point into Capstick at the moment. You don't even know when it's going to settle, but essentially I think there's a high degree of certainty that this deal does get executed. And if you buy 100,000 Kiro today, you will probably within towards the end of the year receive 281 Capstix and 7,617 consults, as well as 85,800 Rand in your money back. So essentially it becomes a purchase of a basket of securities at what amounts at the moment to close to a 4% discount. So if you were looking for Capstick and perhaps a little bit consult on the side anyway, this creates a very, very cheap entry point into those vehicles, specifically the Capstick, which makes up in excess of 80% of the settlement that's going to come through. And especially if you already hold those in your portfolio, you can sort of backwards infer the math and figure out where the free upside is here by switching out that exposure into the Kiro instead.
All right, very, very interesting stock picks. Let's actually start off with Pan-African Resources that told us yesterday that they would be switching their listing in London from the alternative investment market to the main market. Just talk to me about, I guess, the bullish case, if you do have one, for Pan-African Resources.
Yeah, no, listen, gold's shining brightly at this point. I mean, it's up 120%, eye-watering 120% year to date. But again, as mentioned, the hedge has been removed, so there's definitely upside on the current level, as well as this listing on LSE probably creates more liquidity in the name from international institutional point of view.
Yeah.
So I think definitely interesting on that front. I mean, one note is that these gold shares are not cheap, but again, this weaker dollar, various geopolitical factors, as well as lower real rates if the Fed cuts next week, plays really into gold. So I think how you get your gold exposure, I think that's the work that needs to be done, but gold's still probably looking attractive, and of course Pan-African as well.
Yeah. A fascinating one that Cobus came out with yesterday, and that is Kiro. Of course, we know that Kiro will be delisting at some point if the regulatory approvals come together. But Cobus is saying that he wants to get into the stock to get exposure to Capstick, and where he can also get exposure to PSG Consult. What do you make of that?
Yeah, of course, we've got the Maton family making a bid for that Kiro asset at 7.2 billion. It's going to be a share arrangement, effectively 80% of Capitec, and then of course 13% of Consult, and the rest cash. So interesting way of playing it. On this, let's call it summer parts to the current market price discount. We do like Capitec, so always exciting to get Capitec at a lower level, because it never trades low, as we all know. So those REs are around 30%, where other banks are looking towards 20% REs. So I think it's an interesting way of playing it. Only thing I would probably just note is just your time horizon on this deal playing out. But interesting way to play it by Kira.
All right. Well, what are you betting on today? Your own stock pick for today, Brendan?
Yeah, we briefly touched on it. Spar Group, SPP, locally listed retailer. I think the management team has really come to the party on disposing of some of these assets or underperforming assets. You mentioned Poland earlier, as well as now Switzerland. It's trading at a P multiple or forward multiple around 9 times, so not demanding versus the peer group on that front. And I think they are creating synergies through the key regions and KZN, and their margins are definitely looking more attractive. And as I've mentioned, on the local environment, also improving on the GDP figures and possible rate cuts down the line. So yes, retail environment, the share is still down 25% on a year-to-date basis. So we think it's a good entry point here for Spar.
All right. Well, thank you so much for your time and for your insights on what is currently moving investors' money today, Brendan. Really appreciate it. That was Brendan Capstick from Nedbank Private Wealth.